Good morning. My name is Jesse Travis, a financial advisor with GPS Wealth Strategies and a partner with Travis Martin Financial Services. Thank you for tuning in to our first YouTube video that we put together. It's been a crazy couple of weeks. So we were looking for a way to be able to communicate with everyone the most effective way, and this seemed like a good idea to kind of get some information out there around what's going on in the markets and what we should all be doing. So we talk about the last couple of weeks where we've definitely experienced some roller coaster highs and lows. Just kind of go through the facts and the numbers. As of March 12th, 2020, the S&P lost 14.5%, the worst week for stocks since the 2008 financial crisis, so quite a while ago. But you look at that the day after, on Friday, March 12th, we jumped 6.5%. So worst day followed by one of the best days. By all accounts, the drop was largely driven by ever-increasing fears about the potential effects of the coronavirus or COVID-19, whatever you want to call it, and its ultimate impact on the global economy. We've seen, travel bans across. We've seen school closures. We've seen them, shut down sporting events, basketball, soccer, all that's been put on hold. So all of this kind of has a ripple effect through the economy right now. Even though many market observers contend that the market was overvalued and due for a correction anyway, the unpredictability, the strength, and the suddenness of this kind of historic tumble was unnerving for even the most seasoned investors out there. If recent volatility is causing you to consider cashing out your stock holdings, your investments, trading some things around, you may want to just pause and put recent events into perspective and kind of use history as a guide. So instead of saying, it's all gloom and doom, just a few facts. Since the turn of the millennium, the market's negative response to health crises has been relatively short-lived. So we're talking about things like SARS, the avian flu a while back, Ebola, those types of things that we've seen in the past. Approximately 6 months after early reports of a major health outbreak, the S&P 500 has always bounced back by an average of 10.47%. After 12 months, it rebounded by an average of about 17.7%. So even though there's no guarantees the current situation will follow a similar pattern, it may be reassuring to know that over even longer periods of times, stocks typically regain their upward trajectory, helping long-term investors who hold steady to recoup their temporary losses. So just kind of sit back, catch your breath, and take a look at what has happened in the past and what history has done. So we know sometimes when these negative downward occurrences occur, even within the first year and a half, we always come back. And a lot of times, if you look at market corrections outside of health events, we usually bounce back at an even stronger period than where we were before. So what should you be doing during this time? First, keep in mind that market downturns sometimes offer the chance to pick up potentially solid investments at value prices, which could position your portfolio well for future growth. Again, there's no guarantees that stocks will perform to anyone's expectations, and decisions could result in some losses, including a potential loss in principal, but it may be helpful to remember that some investors use downturns as opportunities to buy stocks that were previously overvalued relative to their perceived earnings potential. So use this time to consider making contributions to your Roth IRA or other individual investments that you may have. Moreover, if you typically invest in set amounts into your portfolio at regular intervals, a strategy known as dollar cost averaging, which is commonly what you're doing in your retirement plan, take heart in knowing that you're utilizing a method of investing that helps you behave like the value investors we just talked about. So through dollar cost averaging, your investment dollars purchase fewer shares when prices are high and more shares when prices drop. Essentially, in a down market, you automatically buy low, one of the most fundamental investment strategies. Over extended periods of volatility like we have right now, dollar cost averaging can result in a lower average cost for your holdings than the investment's average price over the same time period. So basically what we're saying is your retirement plan, as you're making those monthly contributions, especially now, this is a wonderful time for you to catch up, and it will actually set you up better later on down the road. Finally, and perhaps most important, during trying times like this, it may help to focus less on the daily market swings and more often on the fundamentals. So don't sit there and look at your account balance every day. Don't pull up the Bloomberg or the Dow and look at what's going on every second, every few minutes. Take heart in knowing that you have a strategy, you have a time period, and unless you're retiring tomorrow or next week, really you have months, if not years, to kind of sit back and let everything kind of stabilize, rebalance, and then you have a lot more time for potential growth. Your allocation can shift in unexpected ways due to changes in market cycles. So you may discover the need to rebalance your allocation by selling holdings in one asset class and investing more in another. And if that's something you have questions about, we're more than happy to talk to you about those types of things. I understand that recessions are a part of the economic cycle and bear markets are unavoidable. This is all really scary and unnew. But the conditions that led to recessions and bear markets in the past were not in place a couple weeks ago. So we're hitting this kind of uncharted volatility with very strong economic fundamentals. We have great jobs numbers, capital expenditures, across the board. The economy was strong going into this, so that's going to play very favorably for us as far as recovery is concerned. So what we're looking at right now is really an unexpected demand shock. And if you're looking for more good news, as far as the coronavirus is concerned, new cases in South Korea appear to be plateauing, which is encouraging. And if you can believe the numbers, the same thing appears to be happening in China. Despite the uncertainty and the sense that we're in uncharted waters, we'll get through this and we're going to be better for it. So just remember, wash your hands, don't touch your face, follow health protocols, don't dwell on what the market's doing every second of every day. And please keep the old adage in mind that panic is not a good strategy. Again, we totally understand your concerns and share many of them. We'll continue to communicate and share information as we get it. Please don't hesitate to pass this information along to whomever you think might benefit. And we thank you for your time and hope this was a good use of it. So have a great rest of the day, and God bless you all.